Okay, welcome back, guys. Nico Picasso here with you. So today I'm going to present to you what I believe is the Enigma, okay? And it's simple to understand. I'm going to be straightforward, and hopefully 2025, when you decide to start trading, you can look into this, you can backtest this, and you will see for yourself that all you really need is two candles to determine your bias and your entry location. So I'm going to repeat that. All you need is two candles to determine a bias plus your entry location. So let's start with two candles, right? Everything was created in pairs. If you think about it, from the first candles that were ever printed in the history of human race, you would need two candles to determine, at least to have an understanding of where price might go. So for that reason, we are going to keep it very simple. Forget about fair value gap, that's a hoax. Forget about inverted fair value gap, that's a major hoax. Forget about order block, that's another crazy one. Forget about supply and demand and tracing all type of zones on your charts. All you're gonna need to identify a bullish bias is a candle body that closes above the previous candle high. For a bearish bias, a candle body that will close beneath the previous candle low. And then that previous high or that previous low is going to be the location where you want to target your point of interest. So if the price goes above it during US session, London session, and you see the price is about to come back to it, then you're going to sell or buy accordingly. I'm going to show you a few examples here. I'm going to start with GBP USD, and just to show you last Friday how it was, okay? So on the right of my screen right here, as you can see, we have the 30-minute time frame. And if you observe carefully, right here, you see I placed a red line and that says 30 minutes to identify the 30-minute time frame, sell above or at. And as you can see, this candle right here, the candle body breaks and closes below the previous candle low. So the short-term bias, as we are on a 30-minute time frame, will be bearish when the price returns to retest this location. Here on the 5-minute time frame is the same location. As we can see right here, the price comes and retests and provide a nice selling opportunity. If you enter here, maybe stop loss above the highs here, 5 pip stop loss, and then the price provide a nice 28 pip move. On the other hand, we had a bullish opportunity. A few hours later, we have this bullish candle body closing above the previous candle high. So that determines that we have a potential bullish bias. All we need is the price to return below. Okay, so we can look at it here on the 5-minute chart. So that's where the high was, got broken. The market comes below. Okay, so in this area, you want to be looking for your buy trades, or worst case scenario, when the price is returning towards that line, that is when you want to enter your buy trade. So let's say we are going to put a buy stop at this location right here. 15 pip stop loss or 14 pip stop loss would have done perfectly here. And then as you can see, the price continue to rise. And that's it. You can look at it on the monthly time frame, weekly. I'm going to show you examples on the weekly time frame just so you can see that this is not random. So let's go here. Let me show you on the weekly time frame. I don't know why. Well, I think I know why ICT tried to come up with all those different terms. Is to create attention on him so he can benefit from a lot of money and views. But in reality, look, here is an example on GBP USD on the weekly time frame. Observe how this candle body closes below the previous candle low. So the candle body, the body closes below the previous candle low. So if you place your line here like so, okay, to identify this previous low, that is going to be your location, at least to look for your sell opportunity for a swing trade. Therefore, whenever the price goes above it, so let's go maybe on the 4-hour time frame here. So this has to be on the weekly. Okay, so here, for example, this is the location. So as soon as this candle closed, the following week, the market goes above. That's fine, because the higher it goes, it's your discount. And then your last level of discount is going to be the previous low. And then let's say that you entered on that previous low as a swing trade, and then you place your stop loss above the previous high, for example, because you're swing trading, right? Then you can see that the market will provide at least 400 pips to the downside, and that is your Enigma. And that's it. You understand? And you can also break it down on lower time frames, such as a 4-hour time frame, to be even more precise. That means when the price is above your key level, which is the previous low that was broken on the weekly time frame, then on the 4-hour time frame, the price is above these levels, you're going to look for more areas where you can actually reduce the levels. So for example, here we have a big bearish candle here closing below the previous candle low. So that can become your area where you can make that zone a little bit smaller, so that whenever the price goes above it, then you can get an entry in this location here. Okay, so refine your entry, right? So again, it's not complicated. Maybe we can even go on the 1-hour time frame and find a way to even refine it even more. I'm sure it's possible. But again, you can literally, as long as you have the main level, key level, your previous low that was broken to give you your bias, then any lows above, there are potential areas where you can refine your entries, right? So if we look at this low right here, when this candle close bullish, right, that can become a potential pivotal point for you, because you can just basically put a sell stop here, because you know your last level of discount is going to be that weekly low, which is at 129.714. So that's it. You can backtest it for yourself, but you will see that's really all you need to make trading easy and complete. So swing trading, intraday trading, even scalping. Let me show you for scalping. Let's say that you are somebody that want to trade scalping, US session, London session. I think the concept is pretty much the same. So here, this is the start of the London kill zone. So that's the beginning of Frankfurt, right? So if you observe carefully on the left, right, look at on the left here, observe how this bearish candle body is the first candle body, okay, that breaks and closes below the previous low. So if you place your line here as a key level, okay, you can see as soon as the price goes above it, it rejects it. And then when London, Frankfurt open, it goes above it again and rejects it. So all these are evidence that those key levels that you'll be looking for to determine short-term bias or long-term bias are basically identifying previous candle close, when the candle body closes below the previous candle low. If you want a bullish bias, the candle body has to close above the previous candle high. So I did create an indicator to identify that. It's called the Enigma. If you go to the indicators, you just search for Enigma unlocked, and I'm going to give you a quick tour of what it does. So what it does, it's identifying every single candle body that closed above a previous candle low. So you see it placed the arrow here. Why? Because this candle is responsible for breaking the previous candle low. And in real time, it will place a line here also for you, so that you know how to, you see, there is a line here. That's from the indicator. Here again, for this weekly candle, so there is a line. So whenever the market comes back here next week, I'm expecting the price to look for reversal, unless if the price want to close above this candle, then we know it's a clear change of trend. Okay, so here are a few examples. This candle here, for example, the body closed above the previous candle high. Okay, so then after the market goes below and retest previous candle highs, so you see also this candle body We have this candle body. So all these are key levels, and then the market is coming and retest those levels before continuing to go up. And this is your Enigma, guys. That's it. 2025 is going to be the year of justice. Okay. So get ready to simplify your bias, identification, and your location for your sell trade. Thanks for watching. Make this go viral. This can be very helpful. It's very easy to understand. And I do not want to take any credit for it. All the credit goes to God because I had to pray. I had to be patient. Because over the years, I learned from many people, including ICT. I didn't watch all his videos because he have a way of teaching, which is, you know what I mean, right? I like to be straightforward, get to the point, because people have shit to get done. Not everybody's life is the same as yours. You have time to waste. We don't have time to waste. So I'm grateful. I was able to put together different understanding over the years. I started to begin my studying and trading in 2012. So 10 years later, the Almighty provided this understanding that was very clear to me, and that is very easy. The truth is easy to understand. Just remember that. Anything that is truthful is easy to understand. Even a child can understand it. If it's complicated and a child cannot understand it, it's not the truth, it's a lie. Or it's a little bit of a truth surrounded by a lot of lies. The truth has to be very simple to understand. Just put that in your mind, right? Okay, guys, thanks for watching. Nico Picasso here with you. Give a follow, a like, and let me know what you think. Back test it for yourself. Don't take my word for it. Back test it for yourself and you'll see. Okay?